Anyway, welcome to the third panel discussion of the DACOM DeFi 2021 Rising Tide series, which is brought to you by Securrency, Solidus Labs, Global DCA, and CryptoCompare. As Alyssa mentioned, I'm James Harris. I'm Commercial Director at CryptoCompare, which is a global leader in digital asset market data. So this panel is entitled The Future of Trading Venues and Regulatory Outlook, and I'm excited to be joined by an elite set of industry leaders to talk about this. And I have Lisa Nestor, who is Senior Director of Ecosystem at Stellar Development Foundation. I have Haohan Xu, who is CEO of Apifiny. Pete Elkins, Head of Trade Surveillance and Market Health at Coinbase. David Newns, Global Head of Global Link Execution Services at State Street. And our good friend Chen Arad, the COO and co-founder of Solidus. As Alyssa mentioned, we have some prepared questions to the panelists, but at around the 50-minute mark, I'll be hoping to take some audience Q&A. So please do use the Q&A function, type in the questions as they occur to you, and we'll tackle as many as we can. So without further ado, I'll hand over to my panelists for a brief introduction, and I'll start with Lisa.
All right, thanks so much, James. So again, my name is Lisa Nestor, and I am a Senior Director at the Stellar Development Foundation, where I work on our enterprise ecosystem team, really just thinking about the Stellar ecosystem overall, business needs, working closely with a lot of our partners and thinking about how we can help them scale their business using Stellar. So it's a pleasure to be here. Also really excited for the discussion.
Thank you, Lisa. Haohan.
Thank you, James. My name is Haohan. I'm the founder and CEO of Apifiny. So during my time at Columbia University, I did a lot of day trading, equities, and algo trading in crypto. I started the company while I was a senior there. Apifiny is a digital asset trading network that aims to connect the fragmented marketplace in crypto. So we mainly service the institutional and VIP retail traders, and we aim to provide them the best price discovery and liquidity available when trading digital assets.
Thank you, Haohan. You are living the trader's dream there. Pete.
Hi, Pete Elkins. I run our trade surveillance and market health team over at Coinbase. Haohan, we probably surveilled you at some point, maybe in traditional finance as well. I spent 15 years as a trader on the floor of the NYSE for Barclays, and then transitioned using levering my skills as a trader to the regulatory space, where I ran a few different teams at NYSE regulation for 4 years. And I levered that experience into opening up and running a first of its kind trade surveillance program and platform at Coinbase, and monitoring and making sure our customers are safe.
Thank you. David?
And thank you, James. And I will, after this, go and open my curtains. I look a bit sinister. I'll correct that in a second. But I'm David Newns. I am the global head of Global Link Execution Services at State Street. Global Link is State Street's independent trading platform business unit. And execution services within that consists of two trading platforms, FX Connect and CurrentX. Now, the FX Connect platform is considered the largest FX trading platform in the real money space, so very much in this sort of institutional space we're talking about today. And CurrentX is a multi-asset class trading platform and trading infrastructure provider in the FX, US Treasuries, and digital asset space. And just over a month ago, State Street launched State Street Digital, a new division dedicated to digital finance, and Global Links are forming an integral part of that division. And I really appreciate being asked to join this panel, and it's a privilege to be in such illustrious company. I'll go and open my curtain.
Thank you, David. And Chen, last but not least.
Thank you very much. Such a pleasure to be here and to host this series of events with CryptoCompare, Securrency, and GDCA. I'm Chen, spelled Chen in English. I'm one of the founders and COO of Solidus Labs. We are the only fully crypto native market surveillance and risk monitoring hub tailored for digital assets. Citigroup recently listed us as category definers for crypto market surveillance. We work with exchanges, brokerages, increasingly traditional institutions, and essentially anyone, and also increasingly regulators on monitoring for, detecting, investigating, reporting, and preventing market manipulations and other forms of abuse, and also increasingly discovering a lot of new ways people can try and do that in DeFi, which I hope we'll get to today. Thank you.
Thank you, Chen. Well, I'll try and extract the maximum from this set of panelists. The participants are overwhelmingly institutional, so it's going to be a very interesting discussion. Perhaps, Haohan, at Apifiny, you have such a great vantage point of the digital asset exchange ecosystem because your customers can effectively use your services to connect to the various trading venues. To set the scene for the panel, could you describe on a high-level basis what this ecosystem currently looks like in terms of centralized and decentralized platforms and how users might interact with them?
Yeah, sure. So centralized and decentralized platforms serve very different purposes in the crypto market today. Although we've seen a lot of growth in DeFi, particularly in DEX space, centralized platforms are still very dominant in terms of trading volume and other activities. So much of the world today still has not adopted crypto yet, right? So centralized platforms like Coinbase serve as a very helpful gateway from the fiat world to the crypto world. So as we see more mainstream adoption in crypto, we'll expect to see these centralized platforms grow. In terms of DEXs, they have actually been existing for a very long time. But only recently have they caught a lot of attention thanks to Uniswap and its adoption of the automated market maker model. So DEXs cannot act as a gateway for fiat because fiat currencies will not operate on chain until some country creates a working and open CBDC system. DEXs today just do a really good job following the mission of decentralized finance. So taking Uniswap, for example, right? It decentralizes the role of exchanges and market makers, so allowing users to facilitate trades and provide liquidity without relying on the competence of a single centralized institution. So that is the value of DEXs today. And today, a lot of the crypto algo traders are actually very actively using both to execute arbitrage or other complex strategies. Just treating DEX as like another normal platform for liquidity. To expand on that, so this type of usage actually highlights a serious marketplace fragmentation problem that involves both centralized and decentralized platforms. So centralized markets as a whole, crypto market as a whole, it's still very much behind the efficient market structure we have in traditional markets like equity. So each crypto exchange is their own marketplace, and there was no platform that unified them all. If you think of Amazon, right? Amazon, they're actually a store of stores. So the biggest value they bring is informationalized merchandise that can only be discovered by a very limited group of people, whether that's a merchandise that's offline or a merchandise that's on a website that no one knows a lot about. So once Amazon informationalizes all the information on a particular merchandise, people can compare prices and shipping speed, and obviously choose the cheapest one with the fastest shipping on the same merchandise. So today's investor in crypto market are sort of living in an era that is sort of pre-Amazon. So they pay for a price that may not be the best on the same exact merchandise. So like that's why you see varying prices on Bitcoin alone on different exchanges. So that is why a lot of arbitragers are trading between exchanges very often. And when DEXs thrived, they kind of saw that as an additional opportunity and drove a lot of usage on DEXs.
Thank you. I really appreciate that answer. Focusing on centralized exchanges for the moment, a traditional one like the London Stock Exchange or a digital one like Coinbase are, as Haohan said, are effectively, fulfilling the same function. Perhaps they should be held to the same standards from a regulatory point of view. David, what do you think about that statement, and how is State Street approaching centralized digital asset exchanges from an onboarding perspective? Are there any extra considerations?
Great question. I think, but first and foremost, I want to emphasize that until State Street has regulatory approval to trade cryptocurrencies and digital assets, we're not able to participate on any digital exchange. That's or indeed offer a digital exchange ourselves, although we are in constant discussions with the regulators and anticipate that situation will change in the near future. So that's clearly the most salient consideration that we have in front of us. But to your question, so all DACs are clearly not created equal, and exchanges like Coinbase and Gemini do have a well-deserved reputation and have successfully targeted the institutional participant base as a result of that. However, I think without the appropriate regulatory framework, then the institutional participants will not have the same degree of confidence in the DACs that they could trade on as they have today with traditional asset exchanges. So obviously, I think an appropriate regulatory framework that's consistent across jurisdictions is needed, although rather easier said than done. But in answer to your statement regarding whether Coinbase should be held to the same standards as the LSE, well, I think that it absolutely should be the case. If it walks like a duck and talks like a duck, it should be regulated like a duck or a DAX. So yes, I agree that a DAX should be regulated in the same manner as a traditional exchange. And I think this would be a positive development for the market. And we've seen that at State Street. So we're very familiar with what it means to run regulated trading venues, in that we operate 2 multilateral trading facilities and a swap execution facility in the FX market within Global Link business with execution services. Our experience is that the standards around governance and transparency and controls, market surveillance, technology requirements, that all kind of encapsulated in today's regulatory environment has been beneficial to the FX market. And has been embraced by the institutional space, and I think essentially created a level playing field across exchanges. Not that I'm saying that MiFID II and Dodd-Frank are perfect, and that we should simply sort of adopt them wholesale and somehow shoehorn them into digital. I don't think that would be a very sensible approach at all. But similar such regulatory clarity in the digital space is one aspect that institutions are looking to. So as they know that they are compliant in terms of their participation on the venue, and the venues that they're trading on are similarly compliant in terms of what services they're offering. I think in addition to that, there's more complexity associated with digital assets that isn't there in the sort of traditional finance space, in that exchanges are also typically custodians. And that's a model that sort of emerged from the crypto native and retail space. Large institutional participants in a traditional space are used to having their assets custodied with global custodians such as State Street, who as a GSIFI, a globally systemically important financial institution, are amongst the most highly regulated entities in the financial services sector. And for good reason, right? Yeah. In that we hold their assets in custody. So until there's regulatory clarity around organizations such as State Street, I think offering custody of digital assets, then that will reduce the appetite across the institutional space to participate more fulsomely in digital. But that having been said, I think we have one potential direction of travel that we see is, rather than just State Street sort of playing the role of we'll hold on to your wallets. I can see that there will be a broader range or sort of array of use cases that our customer base will require of us in terms of managing, holding their private keys, whether that's sub-custodian, custodying it directly at State Street, or self-custody even. But that sort of the orchestration of those different first of all, provision of those different options as supported by a custodian like State Street, and then the orchestration or harmonization of the experience of the institutions when it comes to how their digital assets are custodied, because different digital assets could be custodied in different ways. I think that's where State Street can very much play a significant role. So that's a hypothesis that we're currently exploring is essentially that sort of harmonization and orchestration layer to enable our institutional customers to ultimately participate in this space more fulsomely.
Thank you, David. And on the basis of your answer, I'm extremely hopeful that State Street can enter the market sooner rather than later. I think the analogy of the FX market and how that grew and became more regulated over time is probably a good one for crypto. So fingers crossed you'll be joining the cohorts soon.
And just on that point, just to interrupt, I think that's a good analogy. There's a lot of adjacency between cryptocurrency and FX. I think that we don't have to take as much time in digital as we took in FX to get to where we need to get to, and certainly can learn from that experience to actually accelerate that process.
Yeah, and about quacking like a duck. There's some quarters that believe that actually the standard is being held unnaturally high against digital assets, certainly in the context perhaps of a US ETF. So hopefully we can find this middle ground and start moving forward with what is clearly a new asset class that is justified in pretty much all metrics. Moving on to DEXs again, Haohan, you mentioned a few points there, but really certainly on the volume. So I've got some actual numbers to sort of annotate. So DEXs are averaging about $60 billion of turnover per month. They have been doing for several months this year now, which is punchy in itself. But even punchier is the fact that it's up 60x from where it was this time last year. So for context, though, global spot digital asset market volumes on centralized exchanges averaged 3.5 trillion per month. So in other words, DEXs represent a small but rapidly growing part of the market. And Lisa, short straw for you, but could you drill down on what a DEX is and what its value proposition is to users, perhaps to supplement some of Haohan's comments?
Absolutely. Happy to do that, James. So yeah, I mean, I think essentially decentralized exchanges are open marketplaces that are directly built into blockchains that enable users, whether they're retail or institutional, to trade peer-to-peer. And so kind of as Haohan mentioned, they differ from centralized exchanges and that there's not any central entity, for example, a Coinbase or an MLKYC, that's overseeing or directly enabling the ability of users to trade. And so that's a pretty big differentiator. And so DEXs are able to do this because they utilize blockchains to execute direct, transparent, and programmatic trades between users. So some blockchains like Ethereum utilize smart contracts to execute this, and others like the Stellar blockchain have a built-in order book as part of the ledger itself, or also, you can do both. You can have smart contracts and a built-in blockchain layer. So, I think ultimately, and I apologize for the background noise.
Ultimately, don't worry about it, Lisa.
For me, the real kind of kernel of value that DEXs are delivering to the world is access. I think it is, the ability on both, both the buyer and kind of the issuer or seller side to participate in a marketplace in a way that, hasn't traditionally been available. I think they're going to kind of democratize access to markets, but not even that. I think they're going to kind of reinvent and really challenge some of the ways that we regulate and control user interaction with various types of financial assets. I think it's going to be a really interesting couple of years ahead of us. And so, I think there certainly is a lot of room to grow with the development of DEXs, and the growth has been huge in the last year. I think it's still really just the beginning. There's a lot of infrastructure components that are required to kind of make an open marketplace experience really seamless. And I think that there's innovations that are happening in this space. We mentioned kind of liquidity pools and AMMs, these were things that we weren't talking about really just 2 years ago. And so kind of how quickly the space is evolving, I think is really exciting. But, the ability for users increasingly anywhere in the world to be able to not only access different types of tokens, but these ecosystems. And I think that's what's really interesting. If I'm an individual in Kenya and I can't really access my local infrastructure to get a good loan, but suddenly I can use a wallet to access a token, through a DEX that gives me the ability to kind of borrow. And again, there's a lot of infrastructure that has to be built up around this, but I think that is the potential that this technology offers us. And it's going to be, interesting to see both on the institutional and on the retail side, kind of the growth and onboarding of users into the marketplace.
Thank you very much for that. Pete, so we've set the scene a little and we've discussed the various trading venues. We should also explore market integrity. Now, some of the panelists have touched on these points. But Coinbase is consistently rated in the top 3 of the exchanges that we track, or CryptoCompare tracks in the Exchange Benchmark Review, which grades exchanges across a whole host of metrics with a view to assessing overall counterparty risk. Could you talk a little bit more about trade and surveillance and market integrity on Coinbase? These are areas where Coinbase actually consistently scores very highly. So I'd love to hear your thoughts on that.
Sure. Thanks for having me too. This is really a great opportunity. One thing I think reflecting, so I joined Coinbase in the beginning of 2018 from a regulator looking at regulated markets. And one thing that really surprised me when I was joining and tasked with creating a trade surveillance program was my initial fears coming into the space was that it was going to be ripe with manipulation, that there was going to be price manipulation at the point of sale rampant amongst most markets, and that this was something that everyone in traditional finance had spoken about. And I was shocked to find that once we did get our systems turned on and we started adding protections and really making sure that Coinbase was the most trusted exchange, was not to say that manipulation is a non-event in crypto, but it certainly doesn't take place to the level that it in sophistication that it does in traditional finance. That being said, that doesn't mean we don't have a task in front of us to make sure that our markets are safe and secure and that our customers can trade freely in our platform. And that's something that has been important to us to build and perfect. We launched a regulated exchange level trade surveillance platform on our program on our platform, where we're looking for spoofing and wash trading and monitoring for all your traditionally monitored for regulated manipulations, and also one specific to cryptocurrency itself. This has been so to speak, a wild ride over the last 3 years in building this program, making sure that we're keeping our customers safe and adding these protections. On top of that, we've added layers of protections to our marketplace. We've added price protection points. We've introduced rate limiting. We're trying to make sure that anyone, either via API or through our consumer app or through our pro app, when they are interacting with our exchange, they're doing so in a safe and they're encountering a fair and orderly market. And that's important to us. And that's what we're focused on. This conversation about DEXs brings up some interesting challenges from a surveillance. And let me also take a step back and say that I plus one what David talked about with in terms of regulatory clarity, because that's very important to us. I know that he said if they walk like a duck, they talk like a duck. This is something that we're cognizant of. And, we go out of our way to make sure that we have the protections and controls and systems in place that if a regulator came in tomorrow and said, we're going to introduce these rules and regs, that we'd be ready to meet that standard, and we'd be again, the most trusted in the space. And that's important to us. And we're spending a lot of money around making sure that we have those reg controls and the right people in place. But the DEXs, again, it's an interesting conundrum from a surveillance standpoint, and something I'm sure some people on this panel will talk to. But, from a Coinbase perspective, we want to give people as much access to the crypto economy as possible. So, we view DEXs as a great opportunity, as I could refer to Brian's post, his blog post recently, where he talked about the space. It's something that is top of mind for us, and not a competitor in that sense, but something that's complementary and something that will help, grow, because what DEXs bring to the market, this liquidity generating feature, the ability for retail clients to add liquidity at the point of sale, is similar to what centralized exchanges need. And what we're monitoring for on Coinbase is making sure that we have the depth and liquidity at the point of sale. We believe liquidity begets liquidity, which is the standard axiom. And that rings true with our 56 million customers plus on Coinbase. We're seeing that liquidity build and create more stable, healthy books. But how does that translate into DeFi will be an interesting question as we move forward, for sure.
Yeah, no, indeed. A couple of things you said there. You're monitoring for these bad behaviors, spoofing, wash trading, that sort of stuff. But in the top-rated exchange cohort, with the anecdotal questions I've had with the exchanges, actually instances of that behavior is surprisingly low. When you do find people, what do? Do you throw them in the sin bin, in the naughty box? How does it work?
Great question. So one thing I guess I can comment on that's interesting from our standpoint is there's a lot of education in the space, right? A lot of our customers don't even know that we're running programs like this, right. And we're working hard to get that word out there. A lot of customers in the space in general don't know that there are exchanges running protections like this and looking at the point of sale and looking for transaction metrics. But one thing we do is we reach out to the customer, make sure that they are aware that what they're doing is challenging our rules and the norms and what normal trading behavior should look like. So we certainly do a lot of education, give them that chance to understand that what they're doing may be spoofing or wash trading. And once we're convinced that they have a full understanding and education over what we don't want on our platform, we'll give them that chance to interact again. And if we see a breach again, we're going to have to take action. And that action is limited to obviously keeping somebody off the platform, making sure our other customers are safe. But what's super interesting in this space compared to my life as a regulator was this education piece. I actually enjoy reaching out to customers and saying, you see what you're doing here is what a traditional exchange would look at and say is spoofing. We don't want that on our platform. This kind of behavior can exist, and we'll get lots of folks who are just learning about this type of activity, right or wrong. And education is a large part of our job description these days, for sure.
I really appreciate that answer. Thank you. And look, Solidus Labs, one of our partners for this event series, they offer a range of market surveillance and risk monitoring services to exchanges. Chen, we've heard a little bit from Pete and Coinbase, but how do you see this function evolving across the ecosystem? And if you have time, how do you see DEXs fitting into that picture?
First of all, I have to say, I'm just enjoying listening to everyone so much. These are exactly the kind of conversations that we had in mind when DACOM was founded. So thank you all for being here. First of all, I do want to kind of address this idea of crypto as the new kid on the block. And, being, often being kind of seen as Wild West and over scrutinized. I mean, it's a natural thing for new markets to be over-regulated or over-scrutinized. It's... But at the end of the day, we can also understand why regulators would want to, be a little bit more careful here. We have more to prove, and I think we're all up to the task in this industry. And I guess on that note, like a little bit on, on surveillance in crypto markets and trends there, it's actually quite remarkable. When we founded the company a few years back, we would go to a very regulatory oriented, crypto conference, for example, one about security tokens, right? Doesn't get more regulatory oriented than that. We would mention market surveillance and people would raise their eyebrows, right? They wouldn't even understand what we're talking about in the context of crypto. I think it's fair to say that's no longer the case. James, I can reference your benchmarking report. The numbers, the percentage of crypto exchanges ranked by CryptoCompare that are already using externally provided market surveillance are still relatively low, I believe around 10%, but growing. And we can, and it's a result, of course, of increasing regulation, also just a recognition that we need to protect investors. It's no longer the days of, Jesse Powell, the CEO of Kraken, saying crypto traders don't care or want protection from market manipulation. I don't think he would, I don't think anyone would say that today. But at the same time, obviously there are challenges. I'm sorry, I'm just plugging in to the battery because I was running low. The way we think about market manipulation in crypto space is there are known knowns like wash trading and spoofing that takes place very similarly in the crypto space. There are known unknowns because you can potentially, and we see that you do wash trading and spoofing in very different ways, even in centralized crypto markets. And then there's the question of the unknown unknowns, the new typologies we're constantly discovering. In the last bull run, 2017, we would see a ton of what we call wholesale forms of manipulation. The industry was still relatively young. Needless to say, there were actors who were much more on top of it, like Coinbase, of course, like you mentioned, Pete. But it was a different ballgame. In this bull run, in places that we have visibility into the trading, we don't see that as much. What we do see, definitely in places that are actively, like Coinbase, working to monitor for these and prevent them in various ways. What we do see are more and more very specific crypto native forms of manipulation, utilizing crypto's different market structures, data structures, the fact that regulation is still kind of being figured out, and other elements of the market. Of course, there are also things that still need to be addressed. And, James, you mentioned the SEC's rejections of Bitcoin ETFs. It's at the end of the day due to a very crypto-specific concern, right? They're basically saying in all of their rejections, I think I read most of them at this point, that they're not convinced that shared market surveillance is possible in an ecosystem where the assets are not native to any single exchange. The way we see it is they're basically saying, prove to us that it is possible. And addressing that, but by working with other crypto, with many other entities in the space, including CryptoCompare, of course, and others, is really, a task that we need to take, we're taking on in order to show that this can be a regulated industry. But of course, we're still talking about centralized. We love the word decentralization in crypto. The majority of trading is still centralized, but then it comes to, if market manipulation, fraud, malicious activity in crypto markets is the new frontier, DeFi is the new frontier. And, you have super exciting, new ideas like NFTs that suddenly pick up, and a million people, tons of people start, trading them. And, someone asked me, for example, a journalist asked me recently, is money laundering possible on NFTs? The answer is, of course, anywhere where it's traded, and there needs to be monitoring for it. But, so obviously when new things are constantly introduced, people, get excited, FOMO kicks in, and people don't necessarily educate themselves and make sure that they're careful. But again, it's I think there's no question that crypto and DeFi are, restructuring the way financial services work. At this point, I think very few people will doubt it. What's really exciting is that they're not just doing that, they're also transforming the way financial services will be regulated. Regulators understand that, to supervise these markets, the same, frameworks are not going to, necessarily work in the long run, definitely as DeFi continues to pick up. And they're very open to new ways to monitor for risks. Pete mentioned accessibility, which is a really important part, and I'll finish with that. Pete mentioned accessibility, which of course is one of the holy grails of crypto. Crypto is a retail-first ecosystem, but traditional finance, in a way, risk was very much based on being able to scrutinize who can actually use the market, right? Who has access to it. It's much easier to be kind of confident of the stability when you know more clearly who the actors are. When you open it, and that's really important, more accessibility to capital markets for a plethora of reasons, you have less of those blocks in the entrance. And really the key to safe markets becomes becoming much more surgical and effective and efficient in identifying actually malicious behavior, using new technologies, crypto-native technologies, machine learning, in addition, of course, to best practices from risk monitoring traditional finance in order to do that. And I believe that crypto in that sense is an opening for the future of financial risk monitoring, not just to the future of financial services.
Thank you, Chen. So I'm going to switch speed, as Alyssa says, to a slightly different format and have a little bit more discussions around these questions that I'm going to ask. So we often heard it said that in order for a new product or service to be adopted, it has to be 10x better than the incumbent version. And the CEO of FTX, who's been in the news quite a lot in the last few days, Sam Bankman-Fried, and he also spoke on Monday, he said that crypto will only stand the test of time if it can produce great products and services. So starting with the DEXs then, I mean, are they 10x better, Haohan, at the moment?
Okay, so before I dive in, I want to say I absolutely have a lot of love for Coinbase, and we have a lot of activities there as well. So with the above said, you already know where I'm going with this. I think they absolutely are, and a lot of people would agree with me based on data, right? So if you look at the recent on-chain data, more than 3 million addresses have interacted with DeFi protocols, and 2 million of them have at least interacted with Uniswap at least once. So to put that into perspective, 2 million users is the amount of users that some of the major centralized exchanges had in 2016, which is only 5 years ago. And it took them years to grow that number. So a lot of people definitely think it is better. So to expand on that, so if you are going to compare the models of CEXs and DEXs, CEXs often operate on a central limit order book model, where a lot of traditional markets do. So where the centralized exchange controls the facilitation of the trades to completion, and the centralized market makers provide liquidity and reap most of the rewards in the form of rebates. So how it typically works is market makers typically get anywhere from 1 to 3 basis point per trade, and traders are paying something like 5 to 50 basis point in fees per trade. And exchanges thus have a super lucrative business from taking the cut in the middle. So DEX is better in ways I mentioned before, right? So they decentralize a lot of roles that can typically only be taken on by sophisticated institutions and allow anyone to play a part of that role. So taking Uniswap, for example, What they did essentially, they used automated market making model to decentralize the role of market makers to the people. So that allowed people to reap the benefits of market making and take on the risk, but in a much easier way. And also the facilitation of the trades is a protocol that's doing that. So you no longer need the sophistication nor the capital requirement to become a market maker. So I think it is a really smart model because it is an effective way to draw liquidity and make the market more efficient quickly.
Yeah, and I guess just the fact that people can interact with an exchange with their MetaMask wallet, or other wallets exist, of course, as well, but they can also issue a loan, they can take down a loan, they can store their NFTs. So effectively, with one thing, you can access many things, and of course, the network effects there grow exponentially. Lisa, do you have any points to add on that?
Yeah, I mean, I agree with everything you both just outlined, and I think there's just a qualifying point to your question, which is to whom, right? And I think that's a big part of this, which is that, there are plenty of individuals who don't have, quite as easy access to certain types of financial services in the world. And so, yeah, I mean, I think when if what you're looking to do is just trade crypto on Coinbase, or buy some Bitcoin, then for an average American, like, that experience might not be that different. But if you're, don't have local exchanges that are that accessible, then global access is I think long term much easier around DEXs. But also, just like you said, the ecosystem of products, the ability for an individual with $10 to put it into an AMM and suddenly be able to benefit and earn yield from a protocol that does that. They don't have to have that sophistication themselves. So I think there is a lot of value on the table, particularly as we start to get to the edges and have more participants accessing DEXs. And obviously there's a lot of UI and product layers that need to be developed in that universe as well. And I don't think that they're even right now, but I just think the value is not going to be the same for every participant in the market, or it isn't right now.
Yeah, I'm going to conflate a question that I had planned to ask you later on, but of course, DeFi is more than just decentralized trading venues, as you've just said, and Joe Lubin just referred to it as the first time that individuals can gain economic agency. That's a really exciting thought. So it's a parallel system that's being built here, really. You clearly think it has legs, but in a microcosm, what excites you about it?
Yeah, I mean, I guess we're already seeing pieces of it on Stellar, which is something that's really exciting to me. So, Stellar is very focused on payments. We also have a built-in DEX, and we're increasingly looking for ways that, we can help any individuals who touch Stellar get access to the most interesting, assets and products in the digital asset space, right? So I think when we see a payments company in Tanzania build a product on Stellar that allows for small and medium businesses in Tanzania to execute corporate payments, more easily across the world, whether they're receiving or sending, right? But then suddenly it's like, okay, well, once you have access to your own, wallet, once you have access to assets like USDC, for example, you can kind of gateway jump into other products that maybe provide you more interesting treasury services, right? Suddenly you can hold parts of your balance sheet and earn yield on them, and that product totally didn't exist for you, last year, 2 years ago. And so I think there is a ton around individual, corporate, and especially small and medium businesses, like how they're going to be able to own and utilize their capital in the marketplace. And this is, I think, when people say disintermediating the banks, this is a big piece of it. Suddenly, I don't just kind of hand over my money. I can participate more directly in markets, as a lender or even as a borrower, right? If that's something that I'm interested in. So yeah, I think the access to tokens was really just the beginning. And now it's kind of all of these products that we're able to allow people to participate in, many of them kind of programmatic, And it opens up global marketplaces in a way that we haven't seen yet.
Yeah, no, thank you. And look, David, again, changing tack a little bit. So Joe Lubin said that institutions are massively into DeFi. The emphasis on that statement surprised me. To be honest, I thought that was quite a punchy statement. I think that a lot of institutions are just getting comfortable with the top 10 coins and tokens, and are just about getting comfortable trading at the top-rated regulatory exchanges. But David, from your perspective, and granted, State Street isn't there yet, but is DeFi on their radar? Or have you seen anything to suggest that they're participating directly or indirectly in the space? And what barriers can you think of for your customers?
Well, thank you, James. So I think that I would certainly agree that there's a tremendous amount of interest and an awful lot of enthusiasm about what the technology represents, and I think that's been covered very effectively by my fellow panelists. I would point out an interesting thing about this. Just to go back to the previous question, I had a comment about the centralized exchanges versus decentralized, and I feel that it's not that one will win out, because especially if you look at the sort of there's a symbiotic relationship between centralized and decentralized exchanges, especially around the automated market making functionality, which is that without the arbing, the arbitraging that goes on between the centralized exchanges and the automated market makers, then you're not going to actually maintain an appropriate price point for those tokens on the AMM. So that arbing mechanism is crucial to the behavior, to the performance, or the functionality of that decentralized exchange from that perspective. So there is this kind of ongoing relationship. I don't think that'll going to go away, because it feels like it's sort of necessary for that part of the equation to be hit. But in terms of your question around institutions and sort of adoption, so I think excitement is very different to adoption.
Right.
I'd even say that they're not, and I would say that the majority of institutions are comfortable with trading the top 10 coins or on the top 3 exchanges. I don't think there are certainly institutions which are comfortable doing that, but I would consider them to be within the institutional space, sort of early adopters of the technology, rather than a representation of the majority of. It's a huge community, the institutional space. So, which is why it's so exciting for the digital asset space that the institutional space is sort of it's paying so much attention to it. But there are some real barriers to entry for institutions at the moment when it actually comes to participation. So I think that the sort of relationship between, or the pressure between the interest and the actual ability to execute is really there. And I think that there's a lot of so there's a general, I wouldn't say the general sort of acceptance, but there's certainly a hypothesis that DeFi represents a potential future infrastructure for the entire financial services space. And Joe very much sort of painted that picture of, in the future, everything will be DeFi and will be spent, and everything that we ever do will be sort of managed by DAOs, which is a very interesting picture. And I do question whether we'll be there in 10 years' time, given the pace of given the capacity of some of the participants in the marketplace. And again, I hark back to the regulators. They have a limited capacity when it comes to actually be able to formulate new regulation and apply the necessary sort of horsepower to that activity. So firstly, there's that regulation that everyone is looking at. How do I actually adopt DeFi? How do I use DeFi? How do I access it in a compliant manner? And I think Joe also touched on a number of points around that. Regulating the technology providers seems to be a bit of a rabbit hole or a sort of false start. I feel that it's regulating the participants who actually want to carry out activities that's going to be where the focus should be. Rather than trying to stifle innovation by regulating technology providers. I think the other factor to consider that I think that's sort of a major consideration is security and fraud. Now, in institutional space, cybersecurity is like one of the top major issues or risks that firms focus on. And I think at the moment, you could say that within DeFi, there's a lot of focus around smart contract risk. I think that there's concern around fraud. I've read that I think that 70% of institutions believe that the security concerns over fraud were preventing company-wide adoption of DeFi, and that was a research carried out by Crypto and BCP Platinian. And then I think that there have been incidents, and quite high-profile incidents of actions being carried out, like the DeFi lending platform BZX being attacked, allowing there's I think an Oracle, the Oracle price of collateral to be changed, and then there's the very well publicized $72 million worth of assets from smart contracts being stolen from the DAO. Mm-hmm. So critics of DeFi point towards those as being incidents to not consider adoption, and certainly there's hesitancy associated with that. The other sort of big issue is MLKYC, which has been touched on by others, hugely important for institutions. So to sort of match the sort of C5 fraud prevention and security levels, there needs to be some way to adopt the MLKYC measures that we have to that are prevalent in the institutional space, which is, I think, a real interesting challenge, because one of the what we were talking about DeFi and its benefit and the benefits around it being open and open banking and of course around sort of a blockchain and decentralized trust in general. The concept of sort of censorship seems to be the other side of AML-KYC. I just don't think, and I was listening to Donnie from Securrency yesterday making a pretty impassioned case around the fact that we do not want to be encouraging or participating in applications where we know that money laundering is going on, that the proceeds of crime are being laundered, where or human sex trafficking, or it's not a world that is in any way something that we think that should not be addressed and addressed fulsomely. And I think that the question is, how do you maintain the benefits of DeFi's permissionless nature, and at the same time enable institutions to engage with it by having that AML-KYC sort of hygiene around it. So I think that's a kind of an interesting sort of area. And my concern would be that you end up in a situation where you end up with silos in DeFi of the DeFi world, which is all around compliance and AML-KYC, and then the open world, which is not. And I think that would not be helpful. There has to be some solution to ensuring that that we can benefit from the economies, from the overall openness of the entire ecosystem. Mm-hmm. And then but then I have seen instances where I think that Aave has actually opened up some permissioned pool, which is Aave Pro, which seems to be an indication that that DeFi is taking it seriously and trying to come up with DeFi solutions to that, which I think is probably the answer to the issue here is not solutions that get imposed from the outside, but solutions that are actually part of the protocol. And that would be absolutely fantastic. And I think I covered the kind of administration and custody side of things. And then I think there's also a bit of a capital allocation issue as well, around a lack of infrastructure and services needed to operate sort of large transactions at an institutional scale. And then there's always this sort of the lack of sort of robust on-ramp, off-ramps, again, which Joe alluded to. We're still going to have to go back into fiat from digital. And whenever we do that, we need to do it in a sort of regulatory compliant fashion that addresses all the kind of concerns around MLKYC and so on and so forth in a way that enables efficient allocation of capital. So it's quite a lot of it, quite a laundry list of issues.
Yeah, I did ask a broad question, so no, thank you for those.
Yeah, I think offset by the fact that the passion around the technology and the attention it's been getting, I think is going to lead to innovation that will address these issues over time.
Yeah, no, thank you. And I just wanting to pick up a few audience questions as well. I have one more of my own, but first you mentioned on AML KYC compliance on the DeFi side. Kevin Donahue asked the question: are there any technology solutions? And you're kind enough to mention one of our co-partners, Securrency. They're certainly a firm that you should look at. Chen, also obviously you provide such solutions. Perhaps are there any other names that Kevin should be thinking about, just in list form? No need to elaborate on.
You asking me to recommend competitors?
Well, it's
I'm just kidding. I mean, honestly, there's so definitely addressing market integrity and creating the sort of hygiene that you're describing is not a one company job. There are multiple companies that are doing great work here. On the AML side, Chainalysis, Elliptic, CipherTrace, TRM, labs, Merkle Science are just a few examples. And then there's also the question of, the fact that you need multiple, compliance and risk data points and managing them in one place, which is something we help our clients with. But happy to pick it up at any point, David.
Yeah.
It's a growing and exciting ecosystem, crypto risk monitoring.
Yes, speaking of supporting competitors, we have to talk just very briefly about the incredible capital raise that FTX secured that was announced yesterday. $900 million raise into an $18 billion valuation, and I spotted Coinbase on the new investor round. So that's an incredible statement by Coinbase. They clearly aren't trying to win the space. They're looking to support the ecosystem. Pete, what's your thinking here? Obviously, you've got DEXs as a potential competitive threat. You're in it for the ecosystem, really, aren't you?
No, this is, while I can't really comment on the actual investment itself, what I can say is that, like you just mentioned, it speaks volumes about how we view the ecosystem and how we view what Lisa had said a little bit earlier was access, right? So it's important for us to make sure that our customers have access to the best parts of this ecosystem, right? The crypto economy cannot thrive unless there is broad access to all parties in some equal nature. So we're working hard to figure out how we can provide our customers with access to other systems, markets, pools of liquidity that increases their ability to benefit from this ecosystem, and also will benefit the ecosystem in general, right? As I mentioned before, liquidity begets liquidity. If we can find pools of liquidity on these DEXs, and we can provide the fiat rails and then provide the potential of hosting on a secure and most trusted standard their wallets, then we can provide that safe avenue or boulevard into crypto, into the DeFi space in general. And that's important to us. And that's something that, this investment speaks loudly to, that, this is, we're a partner in this growing ecosystem, and we want to see it thrive. So the brightest minds and the best companies out there are going to interest us in helping us get the entire economy to that next level. So and that access, the fact that Haohan said that fiat rails are not indigenous to DeFi, so to speak. So you're going to need those standard DeFi rails or the fiat rails into DeFi, and that's where someone like Coinbase comes in, where we can protect our customers, make the whole experience as simple as possible, but also make it great and give them as much access as possible. So that's things that are top of mind for us.
Thank you, Pete. Now, completely left field question here from an anonymous attendee. Unfortunately, do provide your name in future. The industry is growing. There are a lot of people coming from traditional. Pete, you're one. I'm one. Several years ago now, but also it's attracting a lot of incredibly bright young people. And one of our attendees is asking, Haohan, and perhaps you can answer this. What advice do you have for someone looking for a crypto job? You went straight from university into trading, and then building an incredible business and attracting lots of people to work with you. What advice could you give?
I think the least you could do is to be a user. So what got me into the space was that I was a super user of GDAX back then, which is now Coinbase Pro. And during I was actually trading equities before, doing a lot of day trading. And during the use of GDAX, I also discovered Gemini like a year later. And I actually realized, the price of Bitcoin is actually very different across the two venues. Like, you don't see this in equities, right? You don't use TD Ameritrade and Robinhood and find like different prices on like Apple stock or something like that. So so when I was using GDAX and Gemini, I kind of realized there was a huge price difference on Bitcoin back then. And I just kind of looked into it why. And that's how I realized the crypto market structure was very different from equity. And it was just super fragmented, and traders, like investors, just can't get the best price discovery at any given time. So that's why I built the company on top of the problem I encountered. So so I think part of understanding the crypto industry and the problems there is to be a super user. Yeah.
Thank you. And Lisa, I'm sure you get inundated with CVs as well. Could you add an extra comment there?
Yeah, I mean, I I think Haohan's comment's really great. I would just add to that crypto is technology, and ultimately, I think people who understand use cases, understand problems, understand areas of expertise that are around that technology, it's all extremely valuable. So I always tell people, like, don't come into crypto thinking that you need to be a crypto trader, for example. Like, that is a really important thing, and I think it's great to use these products and understand like wallet structures and liquidity, and all of these things are very important. But payments on the Stellar world is super relevant, and we're always looking for people with that type of experience. And NFTs, it may be something totally debt financing is huge in this space right now. Like, understanding how we move from something like retail kind of open markets to more business and institutional raising of finance. There's like a lot of areas, and so I think having a passion for the technology, learning a lot, using it, but then also having confidence in your own areas of understanding and looking for those gaps is a really valuable place to enter the market.
I totally agree with that, Lisa. And I'll give my 2 cents on the matter. Just because this is a technology-driven industry doesn't mean that other skills aren't massively in demand. You have the archetypal dev founder, and they're geniuses, and you look around, you find them, but they're nothing without brilliant salespeople around them. So if you've got an ability to articulate an idea, to convince people to join a cause, that is massively in demand and is as important as any product out there. We often see products that look fantastic but die on the proverbial tree because effectively there's been no distribution. So don't be disheartened if you've got a story to tell and you can tell a story. This space is also for you. So I think, look, we're right on the half hour now. I've really enjoyed today's discussion, a really diverse set of, as I mentioned, elite panelists. I'm sure if we can just quickly go do a round robin and say to people how you can be reached for more information. Chen, how can they reach you?
First of all, in relation to the former question, we're hiring, so you're welcome to visit the career page of our website, anonymous attendee. Feel free to reach out to me at any point at Chen, CHEN, at soliduslabs.com or through our website. This has been tremendously exciting. Thank you for this moderator and everyone else for participating.
Thank you. And Lisa, how can you be reached?
Sure. Over email at lisa@stellar.org, or if you like Twitter world, I'm Nestorius828.
Nice. Haohan, Twitter?
Yeah, just Twitter or LinkedIn. I'm usually pretty responsive, and also just at Haohan@apifiny.com. Yeah.
Thank you. And David, perhaps you can't give your State Street address away, but perhaps so people can go to the domain. What do you think?
Oh, no, LinkedIn is fine. So I'm on LinkedIn, and we are also hiring at State Street Digital. So I also want to put that out there. And it's been a tremendous pleasure. Thank you very much indeed, James, for moderating.
Absolute pleasure, Pete. And I guess Coinbase gets quite a few requests.
Yeah, we're actively hiring, looking for great problem solvers. So please submit. You can find me on LinkedIn. Happy to continue this discussion, and thanks so much. This is these discussions always go a long way in pushing us ahead. So I appreciate it.
So thank you very much for everyone, for our panelists, and for the participants.